Many expect that come June, South Africa will be downgraded by at least one ratings agency. So what would a downgrade mean for the rand, the JSE, inflation, interest rates and the economy as a whole? Dr. Adrian Saville, Citadel Chief Strategist, believes that if a downgrade occurs, it is already in the price. And he joins me to further discuss that. Adrian, thanks so much for your time today. We'll get into the effect and the price and what markets are expecting. But do you think we're going to get at least one downgrade from the agencies come June?
Perhaps ahead of whether we think we should get a downgrade is whether we deserve one. And by just about every measure you can bring, South Africa really is in a fragile state from an economic perspective. Growth this year will come in somewhere between 0 and 1% after last year's just better than 1. You made reference now to inflation above the 6% ceiling. Unemployment's at stubbornly high. Our government budget deficit remains beyond the critical threshold. Government debt is hiking. So you put all of these measures into the basket, and I think the net result is it's hard to see South Africa being much better than bottom of the B class. And if that's the case, South Africa, we need to take a hard look at South Africa's credit rating. Having said all of that, a lot of emotion then comes into the frame, and particularly if you take the events at the end of last year around the Ministry of Finance, and it turns into a quick conversation about how South Africa has to be downgraded, and that's an inescapable conclusion.
Certainly.
We don't quite see that reality at Citadel.
Why?
Well, it hinges on technicalities, and so we need to be careful that the technicalities don't get in the way of the economic reality. But it's well within the realms of possibility. In fact, it looks highly likely that at least one of the agencies will rank South Africa as sub-investment grade. But there are two qualifiers that you need to put in when it comes to thinking about the real impacts on the economy, and that is that for South Africa to be ejected from the World Government Bond Index, two things need to happen. The first is the ratings call that is of consequence is the call on local currency debt, not international debt. In other words, rand-denominated debt as opposed to dollar debt. And the second is it's not the call of a single agency, but rather the collective call of agencies that determines whether a country gets ejected from the World Government Bond Index. And by that score, South Africa is actually a number of steps away. When you look at the assessment of Moody's and S&P on our domestic rand-denominated debt, we're still a couple of steps away.
Compared to the foreign denominated.
Correct, and it's on the foreign denominated with S&P's call that we are just one step away.
Now, what do we mean when we say the market's already priced something in? What does that mean? Well,
if you look at what the bond market did, for instance, when a country's debt is deemed to be subpar or of a lower standard, then the interest rate on that debt will go higher, making it harder to borrow money or more expensive to borrow money as a country. And when you go to the end of last year, December last year, South African government bonds went to about 10.5%. That 10.5% put us with a very high international yield, a very high yield on our bonds relative to other international borrowers. If you compare that to South Africa's inflation rate, which means you can then assess the real interest rate, the cost of borrowing versus the inflation rate, gives you how much it really costs to borrow. By those criteria, South Africa sits already at very elevated interest rates. And you have a sense that the market perhaps got ahead of itself in pricing South Africa very expensively, because just in the last week or so, there's been an international bond that has been raised. That bond was 2 times oversubscribed. And South Africa's sort of the headline bond is the R186. And the R186 finished last year at 10.5%. It's just come this side of 9%, which it gives sort of further credence or evidence to the argument that perhaps markets got into a somewhat panicked state.
Yeah, and we know the overreaction that
Sure.
can happen to the news at the time. We'll leave it there.
Thank you.
Thanks for your time today. Adrian Saville is Citadel's chief strategist. Now, former Finance Minister Nhlanhla Nene has joined